Yes, traders. How are you doing? Yeah, it's WCK. So we are going to go through our CPI today, the first CPI after the US elections. Yeah, so we expect it to have some good impact. Yeah, so as always, we are going to break down our CPI into two. Actually, we are going to break it down into three ways. Okay. We're going to break it down into three ways. We are going to break it down through the fundamentals. We are going to break it down through actually the fundamentals based on Forex Factory. That's looking through the economic calendar. Also, another part will be the fundamentals of the general simple breakdown of the US elections. And also, lastly, we shall be having the fundamentals, the technical analysis. So those are the three things. Number one, we are going to look at the economic calendar, fundamentals, what we are expecting, what we should be looking at, and then we shall break down the US economy at large, simply within 5 minutes. Then also we shall go to the breakdown of the we shall go through the breakdown the uh, technical analysis. Okay, so let's start with our Forex Factory. Let's start with our Forex Factory. So today this is our Forex Factory and this is our economic calendar. So this is a different day compared to other CPI we have been getting. This is really a special CPI. So this CPI, if you look at this CPI, we are having, if you look at this CPI, we are only having the USD fundamentals today. Okay, today we are only having the USD fundamentals, and making things more interesting, we are having the only CPI and the core CPI. CPI, the consumer price index, and then the core consumer price index, month per month. Also the CPI for month per month, and also the CPI for year per year. Now, let's first understand what is the CPI, like what is the, when I say CPI, what do I mean? So this is the consumer price index. So this is putting the dollar on scale to see how the inflation is. Okay. So when we get the higher CPI, the higher data on CPI, when it is positive, it means the inflation has been checked and it is not so bad for the US dollar. And when it is negative, it means it has been checked, but it's not so bad for the US dollar. So if you look at the month per month and also year per year, so these are most important things. You should not you should not just take it for granted. Okay, so month per month, don't take it for granted. Don't take CPI month per month for granted. Don't take CPI year per year for granted. Year per year and month per month. When I say month per month, what does it mean? Month per month, it means that we are checking the CPI for only the previous month. Year per year, we are determining CPI of the month of November, but of the of November of last year. So how CPI was from the other, actually it is, to make things simple, it is long term. Okay, when I say year per year, it's the long term CPI. Month per month, it is the short term CPI. But this long term, it is for November previous year up to this November of today. You get? So this CPI, we are going to first look on our month per month CPI. So the month per month CPI, how CPI has been doing month per month, the previous 6 times. So we are seeing that the US dollar has been fighting since June and July. It performed poorly in June and July, but August was stable, September was stable, and then October was positive. So it means that dollar is only increasing fundamentally. If you look on the year per year, it shows positive. There is a big change from that of June. We are seeing the 3.3, 3.0, 0.9, 2.5. It shows that it has been lowering. Okay, it has been lowering, and meaning the US dollar has been backing up and it has been strong. So if you look on the core CPI, it is the same thing. It has been positive, 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 positive. It was bad at June. July was bad. It was negative. Then August, it was positive. August worked as the pivot point, act as the changing point. Okay, so then it went. September, we saw positive. October, we saw positive. So fundamental on the economic calendar. On the economic calendar, it shows that it has been working well. Okay, when you look on the economic calendar, it shows that the US dollar has been fighting back. Okay, the US dollar has been doing what? Has been fighting back, and it is positive. So meaning the forecast, okay, if you look on the forecast, what is expected? Okay, so expected, the forecast shows that they expect the core consumer price index to stay stable. Okay, they don't expect any change. They expect it to stay on 0.3%. Also, when you look on CPI month per month, they are also expecting it to be stable because previously it was 0.02. That was the previous data which was released. But also in our forecast, they expect it to be stable. So meaning the US dollar, all in all, it remains doing well. Okay, it remains doing well. So if we happen to see any number lower than 2%, let's say if we see 0.1% or 0.00, then we can see a very big strong strong US dollar. So also the year per year previous was 2.4%, but the forecast shows that they expect a slight change. Okay, an increment. They expect an increment. So if the increment happens from the 2.4% of the previous month to the 2.6% as forecasted, they expect a strong strong dollar. So meaning after breaking down, depending on the previous 5 CPI data released, it shows that there is a strong backup, it is a strong return. Okay, there is a strong return, a strong fight for the US dollar. That's the previous the previous CPI. Okay, it's previous CPI data released. Yeah, now at least now the economic calendar has shown us that it is positive for the for the US dollar. So as I told you that we are going to be breaking down our CPI into 3 different hubs. So part 1, we have seen the economic calendar. We have made a breakdown on what we should expect and how the changes have happened. Okay, and what we should think. When I summarize our first half, it is like the forecast, it expects almost the CPI month per month and year per year, plus the core CPI month per month to remain stable. Only the CPI year per year, it's where they expect a simple increment. So meaning, in conclusion, they expect a strong A strong dollar. That's technically. The dollar is expected to be strong, depending on the data on the Forex Factory. Now, that's our part 1. Part 2, let's talk about how the economy of the US dollar is doing. Remember, this is the CPI. This is a CPI which has came exactly after the US elections. Okay, so we also that during the US elections, whenever they could announce that maybe Trump has won a certain state, we used to see a strong dollar. Okay, and we could see pairs like gold selling, pairs like GBP USD selling. It means it was positive. Trump coming in, it was positive for what? For the US dollar. Okay, and we have seen that after Trump coming in, Trump winning and being the president-elect of the United States of America, Jerome Powell, remember the next day or next week? Then after the elections, it's when Jerome Powell came in Jerome Powell, we all know Jerome Powell, the chairman of the Federal Reserve Bank. Jerome Powell came in and cut the interest rates. Okay, remember that FOMC, the interest rates were cut. I remember telling you guys what does it mean when they cut the interest rates. So when they cut the interest rates, okay, when the interest rates are cut, it means the citizens of the United States of America will be in position to take loans at a cheaper price. Okay, there will be time to build like there will be time for the citizens, also the government of USA, to develop the what to develop the economy themselves. But once you cut interest rates, it means you have chased away the what? The investors. Okay. So once you chase away investors, it means the US dollar is going to have low demand. Okay, the demand is going to be low because the investors have gone. Okay, but remember the cut which was made wasn't that uh, a moment. Let me first open this trading here. Okay, so I've been telling you guys first. So that's our DXY chart. So I've been telling you that whenever they cut the interest rate, yes, it's going to be good for the citizens because they will be in position to take loans at cheaper prices, but the investors will be just away because of the low demand. Okay, so all of those are the things we should be looking at. But since Trump came in, we all expect a strong US dollar, as we saw on the election day. So, meaning, if you look on the general uh, economy of the United States of America, it's good. Trump came in. Trump has been making some strong changes within the cabinet. Has been bringing out people like we have seen Elon Musk was given a place. Okay, we have seen people. He has been putting out new people who is the one he's going to work with, and those are strong people. Those are people with potential. So that's all good for the what for the USD. Okay, so I think now we can see that fundamentally it's good. It is positive. We expect a positive CPI for the what for the dollar fundamentally. Okay, so yes, so now this is our DXY. Okay, so this is our DXY, and this is how it looks like on a daily time frame. Okay, so it has been positive for some good time. This which block I should. Anyway, so this is our DXY, and you see how positive it has been. Okay, so that's on a daily time frame. So on a daily time frame, this is our simple setup we are having on a DXY. Okay, so we are seeing that it has tried to break through that area. Let me use, okay, so it has tried to break through this area, and it is targeting this area here. This is what the DXY is targeting. That's on a daily time frame. Okay, now, so remember fundamental we have seen positive, but let's see what the technical view gives us. Okay, so let's see what the daily time frame about that. Okay, so technically, this is our daily time frame. We are seeing it is positive. A breakthrough has already happened. They are ranging, beyond this resistance level here. So let's go now for our time frame. Let's see what the 4-hour time frame has for us. So this is the 4-hour time frame. So let's first look for the possible areas of sellers and areas of buyers. So when you look on our 4-hour time frame, this is the area we expect buyers. This is an area with possible buyers, strong buyers. And let's look on an area with strong sellers, with possible strong sellers on the 4-hour time frame. Okay, here we are. This is an area for strong what? Strong sellers. So meaning we have marked 2 areas whereby we expect strong buyers and strong what? Strong sellers. So to minimize it for you, this is what we have. This is the range we are having. Okay. So if we are to look for buyers, we have this our first area for buyers. Also, we cannot leave this out. We can also mark it out as our area for strong what? For strong sellers. So meaning we have 2 areas for strong buyers. We have this as our first area and this our second area. So once we get buyers from here, then once the market touches this area, we can expect to see some buyers coming in to the higher the higher time frames, the higher zone here, the one we have marked this here. So meaning if they either buy from this point or they are going to buy from this point. So we can go into our 1 hour. We can go to 1 hour. This is our 1 hour. So 1 hour, this is how 1 hour looks like. So already if you see on 1 hour, the market is already giving us an area for possible buyers, because this is our setup. You see, this was a good area for possible buyers. You see this expansion which was here, this expansion which was here. So this expansion was an indication that this area is rich for buyers. So buyers, and you see that the market has respected this area. If you come and see that the market has respected this area. So meaning we can see that the market is already respecting buyers. So if they don't buy from that point, meaning this can't be so strong, then we can go and take this. Okay, we can go and take this. Let me draw a zone on this point here. Actually. Okay, so it might happen this. Okay, so this is our number one zone, and also this was a zone, but this zone has been executed even before us joining this session. This was an effective zone, so don't be surprised if the market just continues within the buys. And remember, why do I say don't be surprised if the market just proceeds in buys? We have seen fundamentally, it is all good for the US dollar. Fundamentally, it is all totally good for the what? The US dollar. So this zone was a good one, and you see that the market has already reacted on it. So don't be surprised if the market proceeds in buys. But we have 2 zones. Remember, if this zone is not respected, then the market will respect this. But the market is more likely to respect the strength of the dollar, which has already been there. Okay, we are more likely to proceed with the buys. That's fundamental. According to the fundamentals we have seen, so we are more likely to proceed with the buys, more likely to proceed with the buys. Mark my words, more likely to proceed with the buys. But if this zone is not respected, but which has already been respected, if the market happens to break through this zone, here. If the market happens to break through this zone here, it might maybe respect here and we proceed with the buys. But since the market has already respected, because this was a zone which would have been done before this session happening. Okay, so meaning don't be surprised if the market just proceeds within the what? Within the buys. So if the buys, let's say if the market proceeds with the buys, what should be our target? So this would have been a good target here, but this is a very weak what? A very weak resistance level. So we are just going to put a line, okay, just like that, so that doesn't confuse us. Okay, so okay, okay. So remember, another thing I want you guys to remember on this setup. Remember this setup. Okay, so you see this or what we are having here, this setup here. So this is an early zone. This is an early zone to be respected if we happen to proceed within the market. If they happen to proceed within the market, this is an early zone for the dollar to rest on. Okay, that's if they happen to proceed within the buys. So this is an early what? An early stop if they happen to proceed within the buys. Okay, so that's it on the breakdown of the US dollar. So we have 9 minutes, but within these 9 minutes, okay, within these 9 minutes, second guys, okay, so that's the setup. So before we go on any pair we are going to choose, I'm going to do a pair, any pair which is not a DXY. Let's conclude with the dollar. So this is it. To summarize things for you, this is technical, fundamentally on the economic calendar. On our economic calendar, we have seen that the forecast on the CPI month per month, they don't expect so much a very big change, but the previous CPIs, we can say that we have been seeing some development, some strength. They are gaining some strength within the US dollar. The US dollar has been gaining some strength on the way. Get okay, the previous 5 CPIs. So, and also if we see CPI year per year, it is the same story. There is that momentum which has been happening, the development, the growth within the US dollar, the strength within the US dollar which has been happening. Okay, so that and all that indicating that the US dollar is what? Is strong. Okay, the US dollar is strong and it is very, very strong. If we go on the recent elections, we have seen the recent elections. Okay, the recent elections, we have seen that whenever Trump could take a lead, could see that the US dollar could gain a lot of power. It means this market, remember this market, this is the data. What those candles were seeing, that's data. So this was a sign showing you that Trump is a positive. Trump winning, it is positive for the dollar. Okay, so and we have seen that ever since President-elect Trump was announced, we have seen that the dollar has been doing what? Doing well. Okay, that's other talk. That's a talk outside the economic calendar. But but we have also came to the technical analysis. Technical analysis. We have made our analysis. We have seen that we have two zones. Okay, the market is going to either it's more likely because technically we are seeing that this zone has been respected. Okay, so technically we are more likely to see the dollar gaining, continuing with its strength. Okay, that's to proceed from this zone up to that area, to rest from that area. Okay, also there is a possibility of the market breaking through, retesting this area and also proceeding with sales. That's technical analysis. That's the technical analysis of the dollar. Now let's use these 5 minutes to break down any pair like the USD JPY. So this is the USD JPY. This is the USDJPY. We are going to first use the daily setup. Okay, daily setup of the USDJPY. So USDJPY, we are seeing that we have some big momentum here. We have a momentum here. That was an indication there is an expansion here. This expansion is an indication that below this zone, it is an area of strong what? Strong buyers. And also, if you look at this trend, it's a strong bullish trend. Okay. Also, if you look here, if we happen to see this zone here, you see this zone here was breaking. Okay. So after breaking this zone here, it is an indication that yes, the buyers are so strong. See, you know this zone was so strong. Look at the candle which broke through this area here. It was a candle with a very big momentum. But after breaking through, a retest happened. Then the buyers continued. So this is an indication that this pair is proceeding the buys. Okay, this is an indication. Okay, this is an indication that the buyers are there. So also remember, we are looking for areas rich for buyers and areas rich for sellers. So our first area rich for sellers, area with a lot of sellers, it's an area with this expansion here. We had this expansion here, and as I have told you, this expansion is an indication that behind it, it is an area of strong what? Of strong sellers. But when they happen to break through this area, if these buyers can't hold, but if these sellers can't defeat these buyers who are coming, then we have to expect this zone here to hold. Okay, and as I've told you, behind that expansion, we can also expect another. We can also expect moment. We can also expect another area reach for sellers. Okay, let me hope you're on the same page. So behind it, we have this. Okay, so those are the two zones we have. These areas for sellers, we have two zones for sellers and two zones for buyers. That's the daily time frame. So then we stretch in to go into our 4-hour time frame. So this is how the 4-hour time frame looks like. Okay, so this is how the 4-hour time frame looks like. So you see that we had a breakthrough here on the USD JPY. Okay, we had a breakthrough here. So meaning we are targeting this zone here. So it is self-explanatory. We have 3 minutes. Let me use these 3 minutes to go on our 1 hour. Okay, to go on our 1 hour. So 1 hour, this is how 1 hour looks like, and it looks like they are more likely to also proceed within the buys. Okay, so we have this zone here. I'll just draw the zones because of time. We have this zone here. That's if they happen to not to respect the what? The trend. But if you look here, they have already respected the buys, so meaning the buy trend is already on the move. So, and always remember these fundamentals, they are just catalysts. Catalysts, they just pump the market to proceed within that trend. So we are saying that it's already a bullish trend. Okay. Technically, when you look here, we have zone 1 and the market is already bullish and it's more likely to continue bullish. Remember, this is USD, JPY, USD. According to our fundamental analysis, the technical analysis we did on the DXY, it's an area example that we are more likely to proceed within the what? With the buyers. Okay. So that's zone 1 if they happen to respect it, but this is the strong zone among all. This is the very strong zone. We shall mark it like this. Okay, this is a very strong what? A very strong zone. So where do we expect them to rest? Our first entry to expect them to rest from, we shall not rule it out. It is going to be, might expect them to rest on this area. Okay, so let's see how the market goes. 1 minute from now. Okay, let's wait and see 1 minute from now. It's like 20 seconds to go. So look close on your Forex Factory because you have to look and see what the fundamentals had to say. 4 seconds to go. So let's wait and see the data. So the data has remained the same. The data has remained the same. Nothing has changed. Nothing has changed. Only the year per year data has changed. Okay. Only the year per year data has changed. If you look on our setup, okay, that's our setup there. So that's the first zone. They are playing within the first zone. If you happen to trust the zone, you can first execute your first entries there. On the USD JPY, we are trying our first zone because remember nothing has changed. So since nothing has changed, then why not? You can first take some trades there. Your stop loss should be behind this zone. The stop loss should be behind this zone. If this zone is broken, then we shall have to try this other zone here. Okay, but as we see, personally, I would still buy the US dollar. If as you see me, as me WCK, I will still buy the US dollar. Why do I still buy the US dollar? Fundamentally, nothing has changed. They have kept everything constant. Okay, power price index has remained constant. The core CPI M per M remained constant. USD remained constant. Okay. So what does that mean? Nothing has changed. And also the CPI year per year has came out as forecasted. Okay, that's 2.6%. Okay, so then why not leave it as it is and we still buy the US dollar? Okay, we still buy the US dollar. So this is the simple setup I will give you guys. I'll still go wrong. Our first entry, I'll put my stop loss behind here. That's my stop loss there. I'll just give it a risk to reward of 1 to 4. That's it. That's what I have for you. So the zone has been respected. So this would be my first TP. Take profit 1 would be there. I don't want a very big take profit. You see that would my take profit 1. If I stretch behind there, I'll put my second take profit here. And I'll be selling gold like hell. So our setup remains valid. Okay? Our setup remains valid. And people will be like, why would you look for some sales on the gold? The reason why I will be looking for some sales on gold, it is simply because the US dollar is totally so strong. And also, if you go on the setup of that, the gold, okay, if you go on the setup of gold, you will see that gold yesterday made a strong breakthrough. So why not? Why not buying it? So if they hit this stop loss, then I'll try my entry here and my last entry will be here. So I have 3 entries. Why am I only looking forward to buy that dollar? I summarize this as I cross that day on our successful setup and our successful star analysis, because this was a successful analysis. Before I close, let me summarize for you why I buy the dollar, why I will be buying that dollar so strong, why I will be buying USD JPY so strong. Forecast, nothing has changed. You see, nothing has changed. Everything has remained constant. CPI M per M, it has remained on 0.2%. And of course, if you go on the CPI year per year, that's a long-term look, long-term setup. It has also gone as forecasted. Yes, it was 2.4% previously, but it was forecasted to be 2.6%. Of course, it has remained as it was what it was predicted. Okay, so allow me guys to stop here on this successful setup on our successful analysis always attend these classes. We shall be having more analysis. We are always here on CPI, we are always here on CPI, we are always here on NFT. So guys, allow me to stop here and have a good evening.